Joe Vitale, Vitale Wealth Management, with this week's Gradient Investments Market Update. All data is gathered as of October 22nd, 2024. Let's get into the week. The S&P was up over 0.8% for the week, and it's now over 24% year to date. The international stocks were down last week after a recent uptrend, but international developed, the EFA, and the emerging markets are still up over 10% year to date, and 10 to 15 respectively. So bonds, let's talk about the U.S. aggregate, rose slightly last week and are up 2.98% year to date. The 30-year fixed mortgage rate, which tends to correlate with bond yields, is currently at 6.96% and relatively flat year to date. So it's under 7, but still not where we want to see it. Upcoming economic release this week is relatively light on economic data, but retail sales reported last week were better than expected, which is why we've seen the rally in the market, and we're continuing to get highs. Also, as of 10/18, Atlanta GDP is now estimate growth is 3.4%. So that's actually good growth right now, but there's still a lot of spending going on, so we're trying to see how that's going to work out. Let's talk about the market outlook. In the opinion of the Gradient team, investors appear to be getting more comfortable with a no-landing scenario where the Fed is cutting rates while the economic growth is sustained. The theory has been supported by recent data, which is retail sales, the CPI, and the jobs, as well as current expectations for a 25 basis point cut at the end at each of the next two meetings. Earnings reports thus far have been supportive of continued growth, but only 14% of the S&P 500 companies have reported thus far. So we'll know more in the upcoming week as 112 of the S&P companies are scheduled to report. And that's really what's driving the market. If the good earnings, you're going to see the market continue to go up. If it's weak, you're going to see that pullback. Recent activity, there was no recent activity in the Gradient portfolios last week. You know how the Gradient always is rebalancing, making sure to profit, make sure the correlation is where it needs to be. Let's talk about stocks in the news. Goldman Sachs, which is owned in the Core Select and G50, reported results that beat expectations on sales and earnings, and the company stated that assets under supervision reached a record $3.1 trillion. United Health Group, owned in the Core Select and G50, reported results that beat on both revenue and earnings. And the medical cost ratio, a widely used measure of cost increases for insurers, rose 85.2% from 82.3% last year, based particularly on Medicare funding reductions. So another thing to look at, one of the things we're starting to see, we see all these numbers, right? The GDP, that's looking good, inflation's low, jobs are great, right? But then what we're not seeing is we're always seeing a retraction the following month. Oh, I'm sorry, the data was not correct. Oh, I'm sorry, the data was not correct. So that we saw that a little bit ago, and that had a little correction there. So unfortunately, you want to trust the numbers, and it's really driving the market. But we are starting to see a little bit of softening out there, a little softness out there, a little concern. However, remember, the earnings are still the earnings. The companies, as long as people are still buying and consuming, there will still be earnings. There will be pullbacks. But because we're a lot of good companies, we are going to feel the pullbacks, but being properly diversified, regardless of what happens, we're going to ride it. We do have a lot of different portfolios we can talk about, so a lot of different strategies and options. So feel free to let us know if you have any questions. And of course, Anna will be reaching out to talk as much as we can and meet as much as we can and talk for whatever you need. So God bless you. That's it for us. Thank you so much for being part of our family. We'll see you again next week.